guys, I'm Karunya Rao, and in Ideas for Profit, we put the spotlight on TVS Motor. Now, post a somber Q1 following COVID second wave, TVS Motors managed to put up a strong show in Q2 of FY22. Robust demand recovery coupled with the company's focus on managing costs helped TVS post the highest ever revenue as well as operating profit in the second quarter. Shortage of semiconductor chips, however, impacted the premium bikes production. On a sequential basis, revenues grew 43% to 5,619 crores, the highest ever quarterly revenue for the company. Growth was driven by strong demand across segments, with volumes registering a 39% improvement on a quarter-on-quarter basis. Within segments, if we look at it, mopeds registered a whopping 123% growth QOQ, followed by scooter segment which jumped 90% QOQ. Motorcycle segment clocked a quarter-on-quarter growth of 9%. Despite significant challenges due to commodity-linked raw material prices, TVS managed to post a QOQ growth of 106% in its EBITDA, which came in at 563 crores, again the highest ever quarterly number. EBITDA margins also expanded by 307 basis points as a result of rich product mix, aggressive cost reduction measures, and price hikes undertaken by the company. Now, we believe demand momentum will sustain over the medium to long term. The personal mobility theme will also continue post the pandemic. In fact, the management also indicated that demand is coming back quite sharply and is convinced about a further pickup once vaccination is done for majority and the uncertainty regarding the third wave recedes. Meanwhile, normal monsoon and a strong crop production should lift farmer sentiment and boost rural incomes, thereby benefiting the company. Further, the series of new products such as TVS Raider 125, TVS Jupiter 125 and several other planned launches in the remaining fiscal year could add to the growth momentum. The management believes that on the back of strong product portfolio, it will be able to outperform the industry. Overall, domestic demand for two-wheelers is expected to remain strong and long-term outlook is positive. It's also important to note that in the quarter gone by, TVS Motor lost around 25,000 units of its hot-selling premium bike Apache due to semiconductor shortage. Once that eases, which is expected to happen soon, the company could see further boost in its financial performance. In terms of exports, the company continues to do extremely well in international markets. In fact, it registered a 46% YOY growth in volumes. And the management expects strong demand to continue in key export markets. Talking about EVs, despite government subsidies and price reduction by OEMs, the price of electric vehicles remains higher than traditional internal combustion engines, also known as ICE. The management, however, indicated that it remains committed to go green and has earmarked 1,000 crores to develop the EV portfolio. Company's board has also approved formation of a wholly owned subsidiary for EVs to provide dedicated focus to the vertical. Meanwhile, indigenously developed EV iQube from the house of TVS Motors is getting a strong response from customers and has healthy bookings. The bike is now available in 33 cities and it's expected to be rolled out across the country by the end of this fiscal. TVS has also meanwhile partnered with Tata Power to provide charging infrastructure. Furthermore, it has acquired Swiss e-bike company EGO Movement to foray into international EV markets. Though TVS Motors has been facing significant challenges due to a steep rise in raw material prices, it has chalked out a plan to arrest the impact. It indicated that the rich product mix, cost rationalization and price hikes would help the company achieve the EBITDA margin target of 10% going forward. In terms of valuation, the shares currently trade at 24.8 times FY23 projected earnings, which is at a 21% discount to its long-term average of 30x. Hence, we advise investors to accumulate the stock with an eye on the long term. Of course, there will be some risks to watch out for as well. Any weakness in demand and a third wave of the pandemic could hurt the company's financials. Moreover, adverse commodity price movements would increase raw material cost and hurt operating profitability. So, important to watch out for these potential risks as well.